Everyone, welcome to the Hurley Investments Market View Commentary for the 13th of April. It seems like this year is just flying by. I've asked the group ahead of time, what does this mean to our markets that Trump is now blocking the Strait of Hormuz? And while they're typing some answers in, a couple people worry when I get political, but if anything, in a sentiment-driven market, if you're not willing to discuss what's happening in the market and why, whether it's political or not, you may really find out you missed the boat. Mark Rubio made the comment, every single day this regime in Iran has less missiles and less launchers. That's because we attacked them. Again, someone asked me probably a month ago, what did I think about the war? And my simple comment was, if anyone can make a nuclear bomb that nowadays would be like 100 times more destructive than our bombs that we dropped on Japan back in World War II, I think it's important that we stop the war and just eliminate it. With that said, I cannot confirm nor deny, but I do know of Navy SEALs that are not being placed boots on the ground because of radiation levels. So again, I'm not going to confirm or deny it, but what I do know, or what may or may not have been said to me, boots are not going on the ground because of radiation levels from something that most likely, obviously, we have attacked. Okay. So what does this mean to our markets? Tell me. I'll be honest with you, got very little sleep last night, but the market seems to be ignoring. I agree with that comment. The war, which is really hard because it did not ignore the war for the last 8 weeks, right? So what we now know that there's no oil coming through the strait, when for 8 weeks it was a problem that caused a correction of 10% in basically all of the markets, right, or all the indexes minus the Dow. Why is it ignoring it right now? James, conflict with China. So pretty interesting. Trump shot off China, Russia, and India cheap oil. Kudos to India that they somewhat stepped up to the plate and were willing to work out a deal with America, supposedly, right? Markets ignoring the war. Mary, you say the same thing. Then with that logic, North Korea should have already been done. Right? Oh my gosh, it really, as I sat through this last night, seeing the futures, S&P at one point was down 1.51%, finished today up 1.2. So we had a 2.5% swing from the worst futures last night to where we finished with our market being up 1.02% today. For us, And let's just go for Hurley Investments. We have been working since last Wednesday in opening up positions to the upside. And that correlates with the 10% correction on the indexes. Now, if we take a quick look at some things, they're not completely opened up. And what do we mean by that? We've taken off short calls for huge profits. And this is short calls on stocks out up to 3 months. This is leap shorts on bull calls, and we have adjusted and rolled short calls out to September on, I think, just Google. So the comment is, why? Well, with a 10% drop, we took a chance. In fact, the other chance, I'll just call it our other chance, we will most likely run out of the money puts for this earnings. This earnings has 4 weeks of warrant with less than, well, with none, with no direct oil problems due to the first 4 weeks of the war. People still had oil. It didn't affect transportation per se. We're going to run out of the money puts for earnings. 1, because we already have them. 2, because things bounce back so quickly. And 3, because we believe that the war will have very little impact on a lot of the positions that we're in. Technology, Disney, movies, Walmart. Primarily because the United States does not purchase oil through the Strait of Hormuz. Well, that's not really fair. James will probably correct me on this one. But we don't purchase a lot of oil that comes through the Strait of Hormuz. It's usually from Saudi Arabia, and it goes the other way. We're drilling baby drill. Past history tells us we will be self-sufficient in our oil. In fact, countries, and I'm just going to put this in general right now, countries in general want to, give me a quick second so I can, I actually sent this to Keeve and Brian, so I'd have this thought for tonight. Countries in general want security and sovereign security for your borders, cybersecurity for the internet, and energy security, where you can provide for your own. I'm going to admit, and I'm going to kind of make this comment. The fog of war is a sentimental driven this is called is sentimentally driven decisions. And I guess a lot of what I'm going to say is they're emotional. They're emotional decisions. As we took a look at what we're in for the most part, and why we started taking off some of these positions. Look at the bounce on NVIDIA. As soon as we got above that 200 day, we took off puts, we opened up short calls or took off short calls. We're running NVIDIA naked right now. Naked is then it has zero protection. Our thought process again was, well, it's above the 200 day. It would finished it right on the 50 last Wednesday, and we thought, you know what? Let's let NVIDIA go. Let's give it a run. Let's maybe see where we're going to end up. Apple. Oh, Apple we're keeping out of the money, 250 puts in play through earnings. We took off short calls. Apple's not getting over the 50-day simple moving average, but our goal is to hopefully see Apple run. Boeing. We're right at the point where we're very interested in putting some money back into Boeing. Kevin, 222. It should run up to 280-ish for the year. Maybe 255 to the upside for a 10% run. We like the opportunity we feel we might have in Boeing. Disney, excellent on its earnings. Right now for Disney, we have 95 puts. $95 puts. We're probably running Disney with $95 puts through their earnings. We're gonna let it go as we see. Ford can't get over the 200 day, still has a 50 day. I think Ford has $12 puts. We'll run those through the earnings. Google, boy, we opened up Google a lot. Bounced above it. Of course, it's traded sideways since then, but we're going to run 275 puts through earnings. We also, I believe, took our short call off for a ridiculous amount of profit on the 330, 400 spreads. We also rolled our short calls up to 340 for a $21.30 credit. We are extremely bullish on Google. I just saw a question come in. What would you do in Boeing? We'd look for stock ownership, or we might run a 225, 300 out till June of next year. We like Boeing because of military applications. But we like Google more. Key Corp. Just about everyone has Key Corp. Well, notice that Key Corp, we have $20 puts. We're going to keep those where they are at and run out of the money puts on Key Corp. Why would we do that? Key Corp does not fit into the boat of these regional money lenders where you have, like OWL and so forth, these private equity lenders coming through. As we looked at Key Corp and businesses, this is one that has a chance to get up to $40. The war doesn't affect Key Corp. Higher gas might, but the war doesn't affect Key Corp. Meta can't get above its 50 day. Probably will not get above its 50 day until earnings. The war should not affect Meta. For our stock ownership, we might run the 5 puts we have in place right now. For some of you people, you'll notice a couple of the bull calls, we took off the short side. We were opening up 2 of like the 9 spreads that we have on for individuals. We took off huge amounts of credits, taking in $80 and buying it back for 6. I think the other one was $98 and we brought it back for 2. So some 850 and 880 short calls are now open and off on some Meta bull call spreads that we had in place. My expectation on Meta through its earnings, and I do have the earnings list updated for you. Let me find it. We do have our earnings updated list right here so that you can see what we have and what we found for earnings coming up. Meta is still estimated at 429, but we're probably going to run some stuff out of the money. All of our calculations are telling us this could be a huge rebounding quarter. Micron, look at it moving higher. Watch Micron be back up to 480, if not 500 after its earnings. If it hits 500, yes, we'll be taking some profits on those bull calls. Netflix. We are protecting Netflix with with 99 puts, excuse me. We're going to run Netflix with $99 puts out of the money. Our expectations from what we're calculating for Netflix, good earnings, excuse me, good earnings, and it'll probably run to 110. It feels like, it seems like the numbers that we're working on, it seems like Netflix still has a majority of subscribers using them on a weekly basis by an hourly quantity. I guess they go, 10 hours are spent on Netflix weekly by each user. They're still adding users, howbeit it's more overseas and here, US. They totally obliterated their stock price by doing a 10-for-1 split. But the profit taking seems to have disappeared now. Expect Netflix to move significantly higher. I already went through NVIDIA. Palantir. Talking about the fog of war, we don't understand why it's down the way it is, but we just rolled 150 puts and took in a great profit, put on 134 puts into place, and we're going to run 134 with 180 puts that we sold out for $6 a credit out to July. If Palantir gets back up to 180 and calls stock away, you'll have a great return. If not, then we're not going to be so lucky. We do have 160, 200 Palantir bull calls in place. We also had some 135, 75s that we took off for a pretty good profit, right up at that 150 level. So we're working on some things in returns in regards to there. And then we have Walmart. Dang it, Walmart, we have 125 puts in place. We were really hoping to see Walmart closer to 130, but we did sell a January 2027 short call at the 170 level. So we have a lot of growth to the upside. We may be taking that off as well. We like where we're at, assuming the war will not affect earnings first quarter this year. That means we're taking the risk of guidance. And maybe that's not the best thing to do, but as you're looking at where things are going, you're looking at, how would you say it? You're looking at technology in some areas that are immune to this war. We're gonna go. We're gonna go big. Someone said, "Let it rip," right? We're looking to keep some positions slightly out of the money, expecting a big run up. I know the question is, Kevin, what if you're wrong? And we could be wrong. If we're wrong and things start to tank, there's a long way down for some positions. And we're just going to double up on puts. We might put puts at higher than we already have puts in place so we can create a negative delta and make more money on the way down than the stock is losing. So that's what we're looking at right now. Earnings pretty much have everything up to speed and where we think they're at, where we're after the market, before the market. Just things to keep in place. The big briefing. I love these guys, but I hope you understand just how good your Hurley Investments guys are. Primarily because we do the work, and we do the work way ahead of time. Highlighted in yellow. According to FactSet, because apparently they won't do the work themselves, the first quarter blending earnings growth rate today is 12.5%. First quarter looking for 12.5%, down from 12.8%. They're taking, I don't know, probably transportation out of it, right? That is down from the 12.8% on December 31st, but not to worry. It'll be the sixth straight quarter of double-digit earnings growth. We're using future tense, not conditional tense, because for the aggregate earnings growth rate to be at least 2 or 3 percentage points higher than the estimated growth rate when it's all said and done. The reporting period, like most, will be driven by the information technology sector. Its blended growth rate is 44.4%, which will translate into a 10.2 percentage point contribution to the 12.5% blended growth rate for the S&P 500. So one sector is effectively 80% of the aggregate growth rate. Can someone tell me out of that sector, the technology sector, what's moving that sector? What stocks are 80% of the average growth rate or the 44.4 blended growth rate? Someone type in the answer there. The Mag 7, 11, 17, 19, correct. It's the Magnificent 7 that are still there. It's interesting because a couple people said semis and data storage. Semis, no. In fact, semi pricing from DRAM and SRAM have slightly gone down in that quarter. Data storage is actually falling significantly. You're seeing cheaper prices as Amazon, who controls data storage, especially online or cloud storage, has competitors that are just tearing away at their process. Now, that does not mean that semis and data storage does have some unicorns there. There are some unicorns really in every sector. But semis, the pricing has come down a little for the last quarter, and data storage, rough. And SanDisk, of course, is up today big. So again, unicorns. I'm not saying that there's not unicorns available. Little bit interesting here at the end too. I really enjoyed this, but usual, the early stage reporting period will be led by the financial sector. Heading in 2006, this sector was a popular pick among shares to be overweight. It is currently the worst performing sector year to date. So financials are the worst performing sector. I thought it would have been AI and technology, right? It has been upended by festering concerns related to the private credit market. That private credit market, those owls, the private credit market has been decimated. The rush to request by an AI disruption concerns surrounding the software industry. I find it interesting. And I just want you guys to ask yourself this question. I made the comment in the past. AI is not a one-take-all sector. And my example was look at online entertainment, right? Back in the day, oh, it's only going to be Netflix. Oh, well, maybe Disney. Look at what you use AI for. How many different sources of AI do you use? For me, I use Siri on my phone. I'll admit, I use Chat GPT. What would you use for programming? What do you use for advertising? Already, I find myself using 4 different types of AI. Kind of interesting. Do you use Alexa? Around the home. I do not believe that AI is going to be a one winner take all kind of well, I find it hard to believe that only one company is going to win in the AI arena. And ask yourself what you use. I'll be honest with you. I could throw Meta online advertising in here. There might be, and there probably will be, more than just one winner. And someone just said too big to one company. I agree. You know what company has the most to lose though in the AI race? Someone said Microsoft. I'm thinking of another one. Which company has the most to lose because they own the most market share right now in cloud computing? Anyone know? Amazon. There you go. Bingo. AWS, Amazon. Good job, guys. Their numbers for the last 2 quarters has been horrific. I have only been paying attention to it because of Google. I was trying to figure out where Google is getting all this business from. It's from AWS. It's from Amazon. And shame on Amazon for getting their butts kicked. World markets end this week. Boy, I had it lower last week or higher last week. changing it to lower this week. I'm going back to higher. You can see I prepped this morning, right? Dow Jones Industrial Average. Technically, we're bullish again after 4 days. Crossovers on the RSI. The MACD, and if you use some type of moving average, 5 and the 30, 20 and the 9, however you use it, 5 and the 15, you'll see we've got crossovers. S&P 500, bullish as well. The NASDAQ, bullish as well. Pretty interesting. I have April on the S&P 500 being up 2.5%. If you just look at a chart right now, we're to go from 6,550 up to 68, 6,900. Pending earnings, we'll be back at the 7,000 range. I could be off significantly on the S&P 500 growth for this month. I really hope I am, that it's significantly higher to the upside. Earnings this week, first time I've seen it in forever, but mostly all of the bellwethers for the financial industries are reporting. Goldman Sachs, negative today. I'm going to go over why in one of my reports here. But we have Goldman Sachs today, BlackRock, Citigroup, J&J, Wells Fargo, JP Morgan on Tuesday, Bank of America, First Horizon National, Morgan Stanley, PNC on Wednesday. Schwab, hopefully they'll go out of business quickly. US Bank, Alcoa, KeyCorp, Netflix, and Autoliv on Friday. Economic reports, pretty muted. The PPIs for the expectations are also pretty muted. PPI is expected to go up. Core only 0.4. So something to be paying attention to. Not a whole lot moving. In fact, this week, monthly options expiration on Friday, other than news, could be our biggest quote unquote economic report. How am I looking to trade? We are protected for earnings mostly. Running out of the money puts that we already have in place. All right. I think we put this in last week, but I did want to run this here. I wonder if Gupta's in here. Gupta, I'm trying to see if you are here. I don't see him. I know a lot of educators were really frustrated with the education departments basically being gutted. And a lot of people were not willing to admit that as a whole, compared to the world, our education was going the opposite direction. We were falling in world rankings instead of going higher. I am extremely happy that they kept Title I funding in place. I really hope that they move back to the states. I really feel, and again, we're talking about somewhere between 5.5 to maybe 7.9, 8.1% of total funding comes from the federal government by way of active schools. I know there's funding obviously for loans and so forth that comes from the government, but what a big organization where if they could just take the money for the people that they cut out of it and gave it back to the education in general, I think we'd be much better off. I think we had this one in here yesterday. Palcy's inflation outlook in check. No need to hike rates because of oil. More importantly, Goldman Sachs. Hobbs estimates on record equities trading. Here's why the stock is falling. Active investment doing excellent. Fixed income operations saw revenue fall 10% to 4.01 billion, an unusually large miss of $910 million. Fixed income, once again, that is supposed to be the safe haven. We just had our markets for all intents and purposes get crushed by 10% because of the war. And Goldman Sachs is supposed to be at $4.92 billion, and their fixed income missed by $910 million. That is a huge miss in revenue generated by what's supposed to be protecting your portfolio. Again, we beat up on 60-40 portfolios all the time. And I think one more time, we're trying to give you guys reasons to see why it's not protected, why it doesn't protect portfolios, why you still have huge amounts of bonds, especially on the corporate side right now, especially out in California for state bonds and muni bonds and county bonds in California that go belly up, and there's nothing you can do about it. Please don't think that fixed income is a safe investment. On market crashes, it's just as much risk as anything else. All right. Going through. Tesla is sharply down 2026. JP Morgan sees the stock falling another 60%. We don't invest in Tesla. But for those of you that do, work these numbers because the numbers make a lot of sense to me. Silent killers. How AI startups are trying to solve one of the retail industry's biggest problems. A really interesting thought process that you kind of put your body structure. Hey, I'm 6'1", I'm 275 pounds. I'm a little bulky. Let's see what this looks like on me. Very interesting read. I'm shocked that AI is doing as good of a job as they seem to be doing right now. But a very interesting read. And then this was actually, was it last week? It was. I had this for a week or two. Morgan Stanley says to watch rates, the stock correction is almost over. We found this obviously 2 weeks ago in March, and we started doing 2 weeks ago. We started rolling protections down because we weren't sure. Very interesting article that when we were researching this at Hurley Investments, we thought, you know what? The bottom could be close. We might want to start putting some new bull calls into place. But a very interesting article. Again, work the numbers. You'll find it very interesting and very accurate. And last but not least, well, actually two more. Warren Buffett said he sold Apple too soon and would buy more of it, though not in this market. Very interesting article that even the great ones don't catch tops, bottoms. And Disney's going to lay off as much as another 1,000 workers. Pretty interesting that they're still trying to cost cut to become more profitable. Their cash cow will be their movies. Their Vegas trade is their cruises. The meat and potatoes are still their amusement parks. It'll be interesting to see how Disney weathers really 3 or 4 years of having a pretty piss poor CEO. I'd love to see Disney get back to 208. It was 203, but I don't see it this year. All right, questions for me. Questions for me, anything that I can try to answer for you in regards to anything. And someone just made the comment, Disney too woke for my taste. Yeah, again, it went out on that limb. Not, well, some would say not necessarily as bad as Budweiser. Some would say just as bad or even worse. They have a G-rated movie and having same-sex characters kiss on a G-rated movie that's a cartoon. Probably not the best idea. But with that said, I'm just going to say I'm glad to see Apex is no longer with Disney. Ran it in the ground. Any questions? If we don't have any questions, guys, have a great night. Appreciate you being here. Look forward to seeing you next week. If you are slightly worried about running out of the money puts, send me an email. I would love to get on the phone with you to share what I see, run some calculations with you to see if maybe you'll agree with me or not. But appreciate you guys being here. Have a wonderful evening. Look forward to seeing you next week. With that said, we're always watching the market, so you don't have to. See you next week, guys. Bye-bye.